The crypto world is a perpetual motion machine, but for all its speed, it's always been held back by a fundamental problem, the bottleneck. It's like a futuristic bullet train stuck on an old rusty track. Transactions slow down, fees skyrocket, and the whole system, well, it just grinds to a halt. We've been told this is the price of decentralization. But what if that's a lie? What if one project just shattered that paradigm and quietly, without a single whisper of a celebrity endorsement, proved that you can have speed, security, and true decentralization all at once? This isn't just about a new coin, it's about a technological breakthrough that could redefine what a blockchain even is. And the data is speaking volumes. We're talking about a TPS record that blows the competition out of the water and a scarcity model that's on a collision course with one of the world's most ancient and precious metals. Stay with me, because what I'm about to show you is a massive shift in the digital asset landscape. For years, we've lived with the blockchain trilemma. The idea that a network can only ever be truly decentralized, secure, or scalable, but never all three. Bitcoin prioritizes security and decentralization, sacrificing speed. Ethereum, while trying to evolve, still struggles with high fees and network congestion during peak demand. This is the reality for almost every major Layer 1 blockchain. They all make a compromise. But then you have Kaspa, a project built on a different foundation altogether. They didn't just create a new blockchain, they created a BlockDAG. Think of it less as a single-lane road and more as a dynamic multi-lane superhighway where blocks can be created and confirmed in parallel, not in a single linear line. This unique architecture is the secret sauce behind its record-breaking performance. It's an entirely new way of thinking about how a decentralized ledger should operate, and it's built to address the very issues that plague every other major crypto project. Recently, the Kaspa network hit a mind-bending milestone, a verified, on-chain throughput of 3,500 transactions per second. Now let's get something straight. TPS isn't a measure of how fast a single transaction is. It's a measure of the network's capacity, its raw computational power. And at 3,500 TPS, Kaspa is not just leading the pack, it's in a different league entirely. Look at this comparison. Solana, with its theoretical 65,000 transactions per second, has famously faced network outages and scalability issues. It's a hypothetical number, not a proven one. Tron, often cited for its high throughput, sits at around 2,000 transactions per second. Then you have the rest of the crypto world. Cardano at 250, Binance Coin at 100, and Ethereum, the giant of the DeFi world, at a meager 15 transactions per second. It's almost a joke when you put these numbers side by side. And here's where the real mystery begins. A lot of these high TPS numbers are theoretical. They are hypothetical figures based on perfect world scenarios that often break down under real-world pressure. But the Kaspa record? That was real-world, verifiable, and happened without a hiccup. No network slowdown, no sacrificing decentralization, and no compromise on security. It's the antithesis of the blockchain trilemma and, well, it begs a critical question. If Kaspa can do this, what else can it do? What else is this technology capable of that we haven't even imagined yet? The answer, honestly, lies in the very nature of money. Beyond its technical performance, Kaspa is quietly undergoing a profound monetary transformation. According to new analysis, Kaspa's stock-to-flow ratio is on the cusp of surpassing Silver's in the next couple of months. Now, for those new to this concept, stock-to-flow, or S2F, is a measure of scarcity. It compares the existing supply, the stock, to the rate at which new supply is created, which is the flow. A higher number basically indicates an asset is becoming more scarce. Gold and silver have historically high stock-to-flow ratios, which is why they are considered store-of-value assets. Kaspa, with its predetermined and geometrically declining emission schedule, is becoming scarcer with every passing month. When its stock-to-flow surpasses silver, it means, mathematically, it will take longer to produce the current supply of KAS than it will to mine enough new silver to match the existing stock. This isn't a small detail. This is a massive, fundamental shift in its economic properties. But, as any seasoned analyst knows, scarcity alone doesn't guarantee a price explosion. That's where the analysis gets even more fascinating. The same report points to another, even more significant metric: inactive supply. This metric tracks the percentage of coins that haven't moved in a long time, signaling strong holder conviction and long-term hodling behavior. And the data for Kaspa is astonishing. Kaspa's inactive supply has been growing with an almost perfect consistency, with an R-squared value of 0.99 over a 2-year and 3-year trend. For anyone who understands data analysis, that is an incredibly high number. It means the growth is not random. It's consistent and predictable. This stability is attributed to the project's deep decentralization and fair launch. With no single entity or VC fund holding a massive supply, the coins are distributed widely among a dedicated community of miners and investors who see it as a long-term store of value, not a quick flip trade. This isn't just about a rising price. It's about the very essence of what makes something good money. It's about a network that becomes more secure and more resistant to manipulation as time goes on. It's about a community that believes in the project's foundational principles. Surpassing Silver's stock-to-flow is just the next stop on this incredible journey. If the inactive supply continues to climb as predictably as it has, Kaspa solidifies its position as a truly decentralized, scarce and secure form of digital money, a project that many believe is finally bringing Satoshi Nakamoto's original vision to life. Crypto disclaimer: I'm not a financial advisor. The content of this video is for informational and entertainment purposes only, and, it really shouldn't be considered financial advice. All investments in cryptocurrency are speculative and involve substantial risk. You should always conduct your own research, talk to a professional financial advisor, and honestly, never invest more than you can afford to lose. Past performance is not indicative of future results.